Good morning from our global headquarters in New York. I'm Manus Crenny. You're welcome to Bloomberg Brief. Let's set that agenda. Deeper into correction territory, Nvidia loses $430 billion in value over 3 sessions. The bounce back begins. Supply chain turbulence. Airbus falls short on millions of parts, hurting delivery plans and earnings forecasts. China hits back at criticisms over industrial policy, while President Xi urges his nation to combat its rival countries' tech dominance. Were you nervous yesterday? A lot of people were. Nvidia dropped by 6.7%. It took the Nasdaq down by 1%. We're clawing our way back. Nvidia this morning, you can see, is just managing to galvanize itself, bouncing back. But it wiped out $430 billion over 3 days. It didn't desecrate the rest of Mag 7. You've got to have a look at Meta, have a look at Apple. That cascade lower perhaps offers a magnificent buying opportunity. That's what we'll debate over the next hour. To what extent does a correction in Nvidia provide a buying opportunity? Get ready for a little bit more paper to come down the pike today. $69 billion worth of 2-year paper will come. 10-year yields. Mary Daly warns that we are at an inflection point. There's a dual mandate, just to remind you, which is not just an inflation target of 2%, but it is also an unemployment number. Mary Daly talks about this inflection point. Goolsbee says that he's hopeful. There's somebody out there they've got a March 2.25% rates bet on. That is a hell of a hedge against recession. CAC down 0.6% because Airbus has basically said we're short of everything from engines to the seats that you sit in. We're only going to be able to deliver 770 aircraft, not the 800 that we promised. And down goes Airbus by 10.46%. So if you think your airline fare for this summer is going to be more expensive, this is a choke point on supply of the very seats that we put our posteriors into. That's a sweep on the markets, a little bit of a bond action later on today. We'll bring you those results as they come through, which takes us back to the Fed. The Fed officials are emphasizing the need for more evidence, well, there's nothing new there, on the cooling of inflation before they can lower interest rates. Now, the San Francisco Fed, Mary Daly, warns that the U.S. labor market is nearing, in her words, an inflection point.
So far, the adjustments in the labor market have been modest, not really pushing up the unemployment rate. But we're getting nearer to a point where the outcomes on employment may be less benign.
Well, joining us now is Mark McCormick, Global Head of FX EM Strategy at TD Bank. Mark, good to have you with me this morning. There's Mary Daly talking about that we're almost at some kind of an inflection point. It's interesting. I wouldn't call this a pivot, but it is an interesting shift in the language from Mary Daly about where we are economically. Suddenly, the dual mandate becomes a little bit more prescient.
Well, yeah, I think what they're trying to do is strike a balance between growth and inflation. The Fed has been very heavily focused on inflation for a long time, and I think what they're just trying to do is inject some focus back on the growth side. That would give them some wiggle room if they did see some slowdown in the economic conditions, particularly in the labor market, that would allow them to cut and would allow them to ease and to kind of get out of restrictive territory. So while they're using this language, though, I think the evidence and the focus for the bulk of what the Fed's looking at is still an inflation mandate. And so we still need further progress on the disinflation story that allows them to cut at some point, whether it be September, November, or December.
Mark, before we get into the grip of your doom loop, I'm just going to sort of throw you a wild card, which is I spent, about a minute talking about Nvidia. Do FX strategists, does anybody else out there in the world beyond the equity market talk about the potential impact if there is some kind of, let's say, sort of Damocles hangs over the Mag 7? Do you talk about Nvidia? Does it seep into the psyche of the FX world in any way?
That is what is fundamentally super exciting and fun about the FX market. It is a market of narratives. It's a market of stories. It injects politics, geopolitics, equities, kind of everything. So if you wanted to link it back to NVIDIA, key stories like you go back to the 90s. What drove the strength of the dollar was a productivity revival. It was the capital inflows that came into the U.S. equity market, linked in partly to another tech story. So I do think people in FX, and we specifically do talk about NVIDIA, because what we're talking about is even within our fundamental models that we run in an overlay portfolio, we look at equity momentum. And the thing that's happening for the dollar is our inflation factor, our growth factor, our terms of trade factor, and also our equity factor. If you recall, a couple of months ago, people were talking about the outperformance of the Euro stock relative to the S&P 500. And now, again, all the pendulum is swung back. We're not focused on China. We're not focused on emerging markets. U.S. equities are outperforming. And even if it's just one sector or a couple companies, it matters.
Yeah, it certainly is pervasive in all of our psyche. I mean, whether the bargain hunters arrive and they go, something's down 13% and it offers value, well, that's another debate. But I do want to get, I was drawn to your quote a couple of weeks ago, and so I've resurrected it. And this is, the dollar wins when carry meets politics. But this is essentially what you're saying. We're in the grip of a doom loop. It continues to tighten ever so slightly. Markets are witnessing the typical behavior of a complex adaptive system. And it starts with idiosyncratic events in specific countries, and it morphs into a problem for everyone else. And of course, what you're referring to here is the political upsets that we've had around the world. You think that those will morph. But let's just put in context for our viewers this morning the scale of the unwinding of the carry trade. Where has it been most pronounced? Because these political upsets are what have upended the carry trade.
Right. Back to the factors and the things that drive FX. Everyone for probably at least the last few years has been focused on carry. It was a very unique cycle for emerging markets where the terms of trade, again, most of these countries, at least in Latin America, are oil producers or they're commodity producers. So they had growth, they had high real rates, we had generally low volatility, and they produced the energy and the commodities that were in demand through a mini commodity super cycle. So the carry trade has been essentially a reoccurring theme across FX for 2 years, driven in part by Mexico, driven in part by Brazil. And I think a big thing that's happening here is the point of the doom loop concept is a simple fact that two conditions need to work for carry. You need rate divergence. So you need some countries with really high interest rates. You need other countries with really low interest rates you can borrow from and invest in. And you need low volatility. And I think the thing that we're looking at right now, and we've been talking about it all year, you need the right conditions for it. But if you look at FX volatility or macro vol compared to geopolitical uncertainty or geopolitical stress or even inflation dispersion, FX vol is too low. So I think what we're starting to see, the tightening of the doom loop, is essentially all the conditions start to come together with things that are very unpredictable. If you look at South Africa, if you look at India, if you look at Mexico, and you look at the outcome of the French elections, people were able to predict who was going to win the parliamentary seats in the French election. They didn't know that Macron would call a snap election. So I think that the doom loop concept in regards to carry is going to continue to unwind because volatility is going to continue to shock us. And I think a starting point just for the U.S. election cycle is now this week. We look at Thursday, the winner of the debate will essentially decide, I think, some concept around how much we want to start trading the U.S. election and whether or not we want to start buying the dollar.
You really think this week could be that? You really think that this week, this one narrative between the two presidents could define the trajectory of the dollar? I mean, is the dollar a hedge to U.S. politics, or is the dollar just going to live on exorbitant privilege?
Well, I think this week's election will kickstart the attention span that people can place on the U.S. election. We'll start to see, again, if Trump is seen to have won convincingly. People are already talking about betting odds, and betting odds are basically, they are leaning more towards Trump. And again, the polls are a little bit tighter. But essentially, it opens up people's mindset that it's like, I have to start tactically thinking about this event, which, again, markets get a little bit quiet in July and August just for specific seasonal reasons. But the dollar is ultimately the hedge to the U.S. elections because no one's really been able to trade the concept around, Trump's second presidency. And again, a lot of it swings around tariffs, swings around fiscal stimulus. But if we go back to the things that are driving the FX market, G10 carry, which is a long dollar position, is now outperforming a hybrid G10 EM carry basket, which is telling you that EM is losing its appeal. You don't want to just chase EM because of higher yield because you're worried about uncertainty. And also EM central banks have cut rates. So the rate divergence has compressed. And the dollar offers yield. It offers growth. It offers links to oil prices. And essentially what it could be is there's less certainty that the Fed is going to cut this year. And we already know that the G10 and even EM central banks have started to cut. So the election will kind of reinforce the movements towards a doom loop where we get more volatility through the second half of the year. The dollar is the hedge for that.
Mark, I'm with you all the way, and I didn't even get to put the question to you whether we were going to see Euro parity on the blowout of the French elections. Save that thought for when we're back, and a good stage setter for the rest of the week. That is Mark McCormick over at TD Bank. And tune into the interviews throughout the day. I'll be at Bloomberg Invest. We've got some great conversations coming up. Man Group CEO Robin Grew, along with the SEC Chair Gary Gensler, join the stage. Other top stories this morning. Trending on your Bloomberg terminal with WikiLeaks co-founder Julian Assange to plead guilty to leaking US national security secrets and return to his home country of Australia. The plea is part of a deal with the Justice Department, and it ends almost 15-year battle over his prosecution. Apple rejected overtures by Meta to integrate the social networking company's AI chatbot into the iPhone. That was months ago. The dialogue about a partnership happened back in March, and it didn't reach any formal stage. Apple has no active plans to integrate Meta's Llama chatbot. Nike's betting on $1,000 Air Jordan high tops to win over China. The athletics giant is launching a French push for the Jordan brand in the region, hoping to lay the foundation of a permanent comeback in one of luxury's key markets. Coming up in the show, Airbus, the stock slumps, the plane maker cuts the guidance. We'll delve deeper into the turbulence at Airbus. This is Bloomberg. It's Bloomberg Brief. I'm Manus Cranny in New York. Airbus is coming up short in millions of parts that make the company's commercial aircraft. The situation looks to be getting worse rather than better. The shares of the world's largest plane maker are sinking on the news. We're down 11.1% and change. Sid Phillip tracks our global aviation coverage for us. I mean, it wasn't supposed to be this way. We've been through COVID. We've been through supply chains. We've got roaring 20s in terms of getting us onto planes, and Airbus simply can't make them fast enough. Where is the breakage?
Morning, Manus. So yeah, Airbus is struggling with many part supplies, and they've sort of warned about how the engine supply has now deteriorated, and they can't get enough engines for their flagship A320neo jet. And that's really sort of key to Airbus's success, the fact that they can churn out all these A320neos, and unable to be able to do that. They've sort of had to cut their guidance for the year, saying that they don't expect to be able to make up for the shortfall as the year goes by. And they've also pushed back their target to reach 75 a month to 2027. They were expecting that to be 2026. Now they've pushed that back by a year. So it is sort of a really tough scene for Airbus, especially at the time when airlines are clamoring for as many aircraft as they can get.
It's interesting that the CEO, I mean, it's almost like it's sort of like a shock moment. Wow, I don't have enough engines. Oh, I don't have enough kit to put inside. I mean, I'm very shocked that the CEO would say this is a new situation that we were not expecting. I mean, what happened in January? Did he not see this coming down the pike? You know, whatever pressure they're under, it's nothing compared to Boeing, is it? I mean, they are the most embattled of all, the plane maker. Now, they're offering to buy Spirit Aerosystems. This was the great outsourcing deal that sort of has caused them multitude of issues. They're switching the purchase process. They're going from cash to an all-stock deal. Is this because they're just tight on cash, Sid?
Yeah, I mean, Boeing's been burning through, they expect to burn through about $8 billion of cash through in the first half of the year. And they've sort of, given the fact that they aren't able to ramp up production of the 737, which basically gets them all the cash that they need, they are sort of looking at alternatives. Bloomberg News reported that they're looking at an all-stock deal or a largely stock deal, and they're looking at about $35 a share for Spirit. And that sort of, they expect to take that deal through maybe in the next few days.
Okay, Sid, let's keep an eye on both those stories. That's Sid Phillip tracking the global aviation narrative. Now, a Bloomberg scoop. The Fed is weighing changes to its bank capital revamp. That would lighten the load to lenders. In a statement, the central bank said it has made no decisions on the timing, the process, or the substance, but its revamp instead focused on the substance of potential changes. Jenny Serene is with me. Jenny, this could be capital revamp light if you're an optimist. And if you're a trader out there, you should be saying to yourself, well, we're just about to get our hands on a little bit more risk, maybe for the old VAR model to the credit committee. What do you make of the potential capital lightness that they're proposing?
Yeah, no, I think you're exactly right. So I'm sure traders and probably even a few investment bankers out there are really rejoicing at the types of trades or deals that they could be able to put together if these rules really are rolled back as much as these banks have been hoping for. So I think in the report yesterday that we put together, really the headline number is that, you know, the new proposed changes that the Fed might make, it could mean that the capital rules really only increase capital requirements on these banks by as much as 5%. Now remember, last year when this was rolled out, we were looking at increases of as much as 16%. So that's a pretty severe pullback that these guys are thinking about now, and just shows that these banks have really spent all these months and months complaining about these rules, and it looks like some of that has actually come to fruition.
Well, certainly for once, the lobbyists will be able to stand in front of Moynihan and Jamie Dimon and Jane Fraser and go, you see, your money really has the potential to deliver. But this does, as it were, segregate for those systemically important banks like JP Morgan, as I was saying, like Citibank, which were set to hit a target of around 19%. If this comes in at 5%, what would it really mean in terms of the landscape for global banking?
Yeah, it'll be interesting because I think a lot of what we heard from these big banks over the course of the last year was that they were worried about the competitive footing that this would put them on. So they would have to, you know, take moves and set aside more capital that rivals across Europe or Asia or even non-bank rivals like the private credit firms and some of the private equity firms have never had to do. And so it'll be interesting to see if, you know, with this new, I guess, proposed change from the original proposed change, if it really has any impact on their actual business and their day-to-day models, or if this just means they can kind of keep going and duking it out with these players that they're going up against every day anyways. So I think that was their big point, was they didn't want to be left on a less competitive foot. And so if the regulators do respond in kind, it could just mean that they're able to kind of hold their own just as they have been.
Okay, Jenny, well, certainly the cry from the European and the Swiss CEOs over the years has always been that Wall Street has such a material advantage to them in terms of the differential. Let's see what happens now. Jenny, thank you very much. Jenny Serene there, tracking the finance stories. Coming up on the show, the end of a 15-year legal battle. WikiLeaks co-founder Julian Assange reaches a plea deal with the US court. That's next. Context matters on Bloomberg. Bloomberg Brief. A very good morning. I'm Manus Granny in New York. Global business leaders are flocking to Dalian, China's summer Davos. Bloomberg's Stephen Engel is on the ground at the Economic Forum.
Chinese Premier Li Qiang opening up the World Economic Forum annual meeting of new champions, also known as the Summer Davos, here this year in the northeastern Chinese port city of Dalian, by striking a tone of openness and welcoming foreign investment into this economy. But he also warned against moves to decouple the global economy, saying it will cause a destructive spiral where the fierce competition for a larger slice ends up with a diminished pie. He also mounted a defense against claims in the U.S. and Europe of overcapacity in industrial areas like green technology and allegations of dumping of such goods on the world economy. He says the pursuit of new technologies should not be a zero-sum game. This, as Canada moves to align its import and tariff policies with the United States, which recently raised its import duties on Chinese EVs to more than 100%, and Europe is now weighing 48% tariffs on Chinese EVs to protect their domestic producers. Li also, though, sounded a fairly domestic tone on the Chinese economy, saying despite the struggles in the property sector and elsewhere in consumer confidence and the like in the Chinese economy, they are confident, Beijing is confident, that they will achieve their goal of around 5% GDP growth this year. Stephen Engel, Bloomberg News, at the World Economic Forum Summer Davos in Dalian, China.
And certainly that 5% target for growth will have global ramifications, as well as the deglobalization story, with a lot of tariffs ramping up around the world. What's making you front page news around the world? This is what we've got for you. We're going to focus in on Julian Assange's wife. She tells the BBC she's elated. This is after he agrees a plea deal, which was touch and go at times, she said. Assange will be a free man once the deal is signed. It ends 15 years of a lot of coverage as he was held up in one of the embassies in London for many years. Next up, the information rights Anduril nears $12.5 billion valuation round, led by the Founders Fund, Sands Capital. 7-year-old defense startup closing its final $1.5 billion investment, co-led by Peter Thiel. And the FT leads with this Sheen Files, confidential paperwork, we understand, ahead of a possible London listing. The online fast fashion group files with the UK markets regulator. The Chinese company is valued at around $50 billion. So let's just show you what's happening pre-market. We'll get another snapshot of NVIDIA in just a moment. I mean, it's fighting the good fight. It was down 13% over 3 days, wiping over $430 billion. This is the it's the Mag 5. Mag 4, excuse me, if I can count. A spirited fight back by NVIDIA, up to 1/8%. Apple, of course, Apple and Meta never really took the bruising. They were down by 1/8, by 2.8% over the past couple of days. Meta is flat at the moment. We'll check in on stocks in just a moment. From our global headquarters in New York, I'm Manus Crenny. Let's set your agenda. A pause for thought on NVIDIA after losing $430 billion over 3 sessions. Supply chain turbulence. Airbus falls short on millions of parts, hurting delivery plans and earnings forecasts. And China hits back at criticisms of its industrial policy, while President Xi urges his nation to combat its rival country's tech dominance. Good morning to you. Are you nervous? Are you a bargain hunter? Do you believe that after 13% of value destruction in NVIDIA, wiping $430 billion, is an opportunity for you to step in and buy the dip? Marko Kolanovic warns on equities that this worsening breadth situation is ominous. Laurie Calvasino, a little bit more optimistic. Potholes are something of a temporary nature. Bond markets, if you're a bull, you're going to latch on to Mary Daly's warning that we're at an inflection point in the jobs market. Goolsby is hopeful that the data is getting a little bit better. You've got $69 billion worth of 2-year paper coming down the pike later on today. 474 is where you are on 2s. And to the Paris market, down 0.6%. Airbus cutting back its targets for this year is the ultimate drag on the Paris market. Leave politics aside for the moment. This is the reality of a supply chain which has struggled to deliver seats, engines and aerostructures to Airbus. So injurious to the company's outlook. So that's the state of play on the equity markets this morning. Well, NVIDIA, as I've just said, is taking a little bit of a breather pre-market. We've had 3 days of a loss, shaving nearly $430 billion in market cap off the top. Henry Wren is with me. I mean, Henry, this is, look, many people would say this was ultimately going to happen. You're going to take a breather. That inexorable rise of NVIDIA would run out of steam at some juncture. Are you surprised that we did 13% in 3 days?
Yeah, it all happened in quick succession. I mean, the key catalyst has really been a slew of filings have been showing that some NVIDIA insiders have been selling down shares into the rally. For example, the company's CEO and founder, Jensen Huang, have offloaded around 700,000 shares in the past 2 weeks. It's also not Huang himself have been selling. Some other insiders, including the company's CFO, has been selling as well. Not to mention some other companies in the AI supply chain. For example, Micron has been seeing insiders share sell activities as well. So all those news taken together have been perceived as negative by investors. And we recently seeing not just NVIDIA has been seeing some drops in shares, but also some other key companies in the AI supply chain as well.
I was just looking at the Mag 7 over the same 3 days. The Mag 7 overall as a basket came down by 2.46% relative to the NVIDIA cascade lower by 13%. Meta held up, Apple held up, and even Tesla held up in this. So it's not all components suffering the same affliction.
Yeah, indeed. So NVIDIA has been definitely like one that get hit the hardest, but we have to take into perspective that NVIDIA has risen around 140% this year to date. And its 140% rise this year has accounted for 1/3 of S&P's advance in 2024. And if you take Meta, Apple, Microsoft, all those four stocks together, that's half of the market's advance. So from a market, from investors' perspective, this has caused some concerns because this has been bringing a huge concentration issue. If there's a significant slowdown in AI supply chain, that could be an issue for the broader market as well.
Okay, Henry, thank you very much. Henry Render on the NVIDIA stock price drop. My guest this morning is Fiona Boal, Global Head of Equities at S&P Dow Jones Indices. Fiona, good to see you this morning. Were you shaken by NVIDIA 13% in 3 days? A little bit of a drive-by?
Look, I think, one constituent does not make an index. The S&P 500 is a market cap-weighted index. It's done what it said it would do on the tin, and it's still performed very well this year, up year to date, sort of around 14%.
Do you think when you look at this kind of a moment in markets, it is pervasive because all asset classes, in many ways, look towards these juggernauts at the top of the S&P 500. Are you worried about breadth? I was looking at some comments coming through from a number of people. Kalanovic over at JP Morgan warns of this lack of breadth as something that is ominous.
Look, we know that there's significant concentration in the S&P 500, the top 5 stocks accounting for about 28% of the market cap. That is undoubtedly high, but there are alternatives to investors if they are worried about breadth. They can look at equal weight strategies, they can go down the cap table, look at the 400 and the 600. So there's lots of options when it comes to particularly the US market.
What do you think the hedge is here on moments like this?
I think investors need to consider their long-term strategy. As I said, those that might be worried about diversification have options to look at things like the S&P equal weight, which over a long period of time has actually outperformed the S&P 500. They can look at capped indices, products based on capped indices, or they can go down the cap table and look at things like the 4 and the 600.
In terms of moments like these for equity markets, we're getting ready for politics, a big political debate. My guest a little bit earlier on the FX side suggested that this window of the first debate certainly would focus the minds and the attention of the foreign exchange market in terms of how they may need to tactically position, prepare for more volatility in the FX space. How does this week present an opportunity to focus the mind of the equity market and equity trade?
As you said, there's certainly a lot of geopolitical events, macro events coming up over the coming months. One way historically that we've seen investors play those events has been around sectors. In a traditional month, the sector effect on the 500 on dispersion is only about 1/3. When you get to, the Novembers where we have US election, that dispersion influence of sectors grows significantly. So we know that investors use things like sectors to play particular themes, especially around major geopolitical events.
I mean, geopolitics have been unsettling, haven't they? Both in Paris at the moment, our eyes are trained on that. I got UBS coming on yesterday telling me, like, don't worry about it, this will blow over. Now is a golden opportunity to take advantage of these drawdowns in some of these European indices and step in there. Do you share that sort of optimism that it's a moment of a shakedown, but not something more structural or fundamental that we need to worry about in terms of capital outflow, wealth destruction? I mean, if you look at the UK and you look at France, I mean, the one biggest risk is, of course, wealth and capital outflows post these elections.
We know that markets, over long periods of time will always have points where they react very violently to things like changes in regulation, to macroeconomic events, and of course to politics. But I think, over the longer term, we can be confident that the indices that we have are doing what they say they should do. They're representing the market, and investors have, an enormous variety of index-linked products to look for as things change and evolve.
Talk to me about the flow. I was just looking at the overall flow. $95 billion has gone into equities over the past 9 weeks. So the momentum is there, and the heaviness of that momentum is here to the United States of America. That flow show continues. But I just want to get a sense from you whether there's any sense of that being stretched. You talk about a diminished buyback. We go into a period of where the buybacks perhaps run out, and some of the alpha may be diminished.
Flows have been impressive into equities so far this year. That is definitely the case. We'll have to wait and see whether that continues. But we know that, investors hold large portions of their total portfolio in equities. And while the mix might change slightly, over the long term, equities are the place that most end investors want to be.
When you look back in history, this was something Julian and Emmanuel reflected on. So we're trying to debate whether this is an expensive market by valuation, by PE, choose your metric. This is what he said. While all prior expensive periods are unique, well, everything's unique in history, isn't it? 1993 to 1995, 1998 to 2000, that was tricky, and 2020 to 21. That wasn't as tricky as 2000. But they all illustrate that valuations alone are not a sufficient reason to sell. You've got a Fed looking to cut, an AI revolution to support the 2024 upside. How much do you think sentiment is driven by AI revolution, evolution, and how much of it is driven by, the uninversion of the curve and those cuts to come from the Fed?
If you look at the dispersion of sector returns, you would say the market remains solely focused on an AI structural change to the economy. You've seen those sectors that tend to be more domestically focused in the US, maybe more sensitive to interest rates, haven't performed as well, whether that be real estate, industrials, even financials to some extent. So there does seem to be differing views there around, what's driving the economy. And what's driving the performance of the equity markets. I would say to the point we are today, it's definitely been the view of a major structural change that will come from AI.
Fiona, thank you so much for being with me. That is Fiona Boal at S&P Dow Jones Indices. And tune in throughout the day. We've got some cracking interviews for you. We've got the Man Group CEO, Robin Grew, is here in New York. The ACC chair, Gary Gensler, joins Bloomberg Invest through the day. Stay tuned for those conversations. The bond market, we are counting down. We've got a reasonable amount of supply to come through in the US. Today, it's the turn of the twos, the terrible twos, $69 billion of two-year paper. Of course, many people have sort of said, you want to be at the shorter end in duration. You don't want to be out at that longer end because of the fiscal risk and the political risk going into next year. Yields are flat at the moment in the US, and 240 is where we are in Germany. Will the ECB be bounced into a little bit more aggressive action on the geopolitical situation in France and beyond? Coming up, we'll talk more about geopolitics. China warning against economies decoupling. This as the World Economic Forum kicks off in Dalian. Context matters on Bloomberg.
Maximizing one's own benefits at the expense of others' interests, or even resorting to regressive actions of decoupling, disrupting supply chains, and building small yards with high fences would only push up operational costs, sever the economic links between regions, and aggravate tensions and disputes. This would drag the world into a destructive spiral where the fierce competition for a larger slice ends up in a diminishing pie. This is something we do not want to see. As we Chinese often say, range far your eye over long vistas. In the current context, the right choice is to approach development issues with a longer view and broader mind, and join hands with others to make the pie bigger, while pursuing one's legitimate interests. This is how we could sustain the growth of the world economy and open new horizons for our own development.
That was the Chinese Premier Li Qiang kicking off the World Economic Forum in Dalian in China with a warning on economic decoupling, a potentially destructive spiral. Jill Decis is with me from Hong Kong. Jill, I mean, look, we've had story after story from the Germans trying to get an off-ramp on EV tariffs, the US smacking tit-for-tat tariffs. I mean, this is the fight back from China, but is it falling on deaf ears given the current post-COVID world that we live in?
Well, Manus, I think we'll have to see. I think, first of all, Li Qiang, so he's the premier, the number 2 in China behind Xi Jinping. I think his words were pretty strong there. I mean, you just reiterated that you know, him calling this a destructive spiral. I'm not sure how much this speech necessarily moves the needle, considering these are words that we've heard from Li and others in China for well over a year now. This was actually something that he had brought up just last summer, months after becoming the premier in China. But right now, it's a very, very tricky time for China's relationship with the rest of the world, of course. I mean, we've heard everyone, you know, particularly in the U.S., really criticizing China for these issues of industrial overcapacity. Obviously, China's pushing back against that. I think when it comes to those European EVs, I mean, we certainly know that China is trying to, you know, make some headway there. The Germans were just in China a few days ago, where it sounds like there were some conversations there about, you know, whether or not they kind of ease back on some of those tariffs. We'll have to see. But I mean, when you've got, you know, literally just yesterday, Canada actually joining in on this really, you know, this U.S.-led effort to kind of put in these curbs on you know, EVs, other types of Chinese goods. It's still a long way to go before I think we see any kind of major breakthrough there, it seems.
I think the reality of the whole decoupling, deglobalization, in essence, is ultimately higher prices, which is ultimately a global monetary policy issue, which is inflation. And then normal people like you and I have the reality of what global decoupling is, which is higher prices for everything that we go for. Look, in the end of the day, this is about China standing up for itself, building its own narrative and becoming more independent. And this is what the president himself has been touting, the importance of building China's tech sector. We saw the Broadcom deal yesterday, which will be within the rules, but it is about getting up that tech curve, Jill, isn't it?
Yes, I'm glad you brought that up, Manus. I mean, we did just hear from Xi Jinping himself. He was speaking separately at a science conference yesterday about the importance of some of these issues. I mean, you know, sort of building advanced tech for China and becoming independent from the rest of the world on this issue has been a major, major platform for Xi Jinping over the last 5 years or so. I mean, we know how much China really, really wants to create its own types of advanced chips, for example, particularly when you've got all of these U.S.-led export controls on things, trying to prevent them from doing so. We've seen breakthroughs in China over the last couple of years. I mean, I continue to go back to that Huawei smartphone last year that really did seem to move the needle a bit on tech. But I think what Xi Jinping really envisions here is a much broader, much more forceful show of China's ability to sort of break away from the U.S. and sort of create its, you know, this advanced technology, particularly if China is expecting a continued tension with the U.S. on trade and over, you know, the potential for additional sanctions that could curb its ability to develop this really, really advanced technology.
Yeah, well, of course, there could be political change in the United States of America, and that will add fuel to the tariff fire, which has not been extinguished in the past 4 years. Jill, thank you very much. Jill Decis there on the China story. Shares in Airbus are sinking by double digits this morning after the surprise warning that they're short of millions of parts that make up its commercial aircraft. The CEO, Guillaume Faury, saying that analysts, quote, jet engine supplies are in particular have recently emerged as the bottleneck, and they have contributed to Airbus lowering its outlook. That is a new situation we're not expecting. I thought CEOs were supposed to be forward-looking, planning and strategic, seeing the obstacles in the way of growth, Sid. What went wrong?
Yeah, morning. So for Airbus, the biggest problem at the moment is supply chain. I mean, you can't put together an aircraft without all your parts being available. And they're talking about how there is a shortage of parts across the spectrum, particularly engines at the moment, and also sort of cabin interiors and other parts. And so for the plane makers, it's impossible because they have huge demand. Airlines are clamoring for new planes. Aviation has taken off post-pandemic. And instead of being able to deliver on that demand, they're sort of dealing with supply chain crisis after crisis. And this has been something that's been coming for a while. So since the pandemic and the ramp up since, they've been talking about how supply chains have been sort of struggling. And that sort of seems to be the theme that continues as they go forward.
And Boeing obviously slipping as well. I'm just looking at the pre-market. It's down 1.3% at the moment and change. They've got issues as well. I mean, embattled would be the understatement of the year on that company. They're in the process of trying to buy Spirit Aerospace. This is to try and sort of consolidate their supply chain, bring it in-house, so to speak, after the folly of great outsourcing. But they're flipping the deal structure to all stock from cash. Is that because they're short of cash, or is it just a more prudent deal making to get it over the line?
Yeah, so it's still early days on that, and we understand Bloomberg News reported yesterday that Boeing is looking at a stock deal instead of an all-cash deal. And that's, I mean, Boeing has been burning through piles of cash. I mean, they've talked about how they expect to burn through $8 billion in the first half of the year. And given the fact that the FAA has constrained their ability to ramp up production on the 737 MAX, which is their workhorse and sort of biggest source of cash, they are looking at alternatives. And in the scenario that they aren't able to sort of generate enough cash. And so I think for Boeing, this is a sort of existential question. I mean, they're bringing back the Spirit Aerosystems, which was spun out in the great sort of when they were sort of dissolving the whole Boeing supply chain. And now they're sort of trying to bring it back in as they sort of try and bring back quality and sort of focus on quality and basically putting planes together much more efficiently.
Okay, just think of the bank exposure to Boeing. Nobody wants any more trouble. Really in the structure of that company. Sid, thank you very much. Bloomberg's Sid Phillip. Coming up in the show, Fed speak. Yeah, you got it. Treasury auctions, you got it. We've got everything. Context matters right here on Bloomberg. Good morning from the city of New York. It's going to be a hot, hot day. It's Bloomberg Brief. I'm Manus Cranny. It's a live shot of Central Park South. I have it on good authority. It's 70 degrees right now out there. We're going to coast up to a mild 90. It's going to get sweaty in the city. We'll keep you appraised of the temperature. Stay hydrated and stay off the subway, I'd say. Let's check out what else we've got for you today. This is what's on the agenda. We've got more Fed speak after Mary Daly yesterday. We've got the Fed governors, Michelle Bowman, Lisa Cook, 7 a.m. and 12 noon Eastern, respectively. Never far from an auction, $69 billion of two-year notes. We've got 2s, 5s and 7s. Just under $200 billion of paper coming down. Let's hope we don't get indigestion. You like a cruise, Carnival? The results are going to hit before the bell. And if you're using FedEx, we're also going to find out what kind of margins they have delivered. There's really only one stock that matters. Matters pretty much every day, but there you go, there is NVIDIA. It's a spirited fight back. We wiped out $430 billion over the space of 3 days, down by nearly 7% yesterday, so it's up by 3% just at the moment. Spirit Aerosystems, Boeing switches to stock-funded bid. We're just talking to Sid about that. Stock is down 1% pre-market. I'm off out to enjoy the sun. I'm not. I'm off to Invest America by Bloomberg. Some cracking interviews today. This is Bloomberg.